Hey everybody, welcome to Hashing It Out. I'm Jordan. I'm a senior software engineer here at the Nervos Foundation, and today I am joined by ZenGate. That is, of course, Theodore Morissis, the head of operations at ZenGate. Theodore, how you doing today?
I'm doing very well. It's a pleasure being here with you.
Yeah, pleasure to have you here. And then next up is Sam Lambert. He's the COO at ZenGate. Sam, how you doing?
Great. Thank you for having me, Jordan.
Yeah, thanks for being here. And of course, Dan Friedman, he's the CEO at ZenGate. Dan, great to have you here. I believe this is actually the second time you've spoken in our ecosystem. You talked on Nervos Nation in the past before. Is that right?
That is correct. That was a couple of years ago. And also, of course, been seeing you guys quite a bit in the on the circuit, on the in all the different conferences, meeting up with the community. So yeah, great to be here.
Yeah, great to have you here. All right, so before we get into it, I got to go through a couple quick things for the audience. This is a live show, so today we're not going to be having any kind of price discussion at all. Please, no questions about price. There's also not going to be any discussion about this, certain controversial or off-limit topics like what are the future exchanges. We don't know those. We can't talk about those. We also can't give you any financial advice today. And then the most important thing is all of the opinions today expressed on the program are of the individuals, not of the Nervos Foundation itself. We're broadcasting live right now on YouTube and Twitter. It seems like there's about a 10-to-1 ratio of people who like to listen on Twitter. But if you want to interact with us, if you want to ask questions at any point, you got to be on YouTube. That's the only thing that we're able to pay attention to right now through our software. So at any point in time, please feel free to ask your questions. We'll try to answer as many of them while we're in the program, and then afterwards if we have time at the end. So anyway, we are talking about a very important project today, Palmyra, an RWA trading and lending application that just received the approval through the Community Fund DAO, and it will be hopefully launching in Nervos in the future. I'm going to give a very, very quick opening brief to this. It is an RWA commodities trading platform. That means real world assets. Real world assets is one of those umbrella terms in the industry. It means 100 different things. But this has always been one of the holy grails of blockchain. Every time you've read an article, you've been reading about how is this going to affect the world? How is blockchain really going to make a difference? RWA has always been one of those things. So today, we're going to let the team explain what flavor of RWA this is and how it actually fits into the big picture. So let's just go ahead and dive right into it, starting with, for the people who are unfamiliar with Palmyra, what exactly is Palmyra and what was the motivation behind creating this platform?
Sure. I think actually Sam can do a much more succinct answer because this has been a passion of mine for several years, and I kind of tend to ramble on a bit. So Sam, why don't you do the quick explanation for everybody?
Sure. So the Palmyra platform is a commodity trading and lending platform, and what we've been motivated by was through our travels as well as our work experience in emerging markets for a number of years before starting this project. We found that producers in many markets faced three really common problems. And the first problem was access to new markets. And this really meant being able to expand their reach and sales opportunities in areas that they might have not already been. But the same as well for buyers who are really looking to secure their supply chains in an ever-changing geopolitical world and shocks that were happening, especially with shocks that we saw with COVID impacting supply chains. The second thing that we noticed as well was access to capital. So what this meant was people looking to borrow money at more affordable rates. And in many cases, that isn't possible. Or in the cases that it is possible to borrow money, it was extremely high and predatory in many cases. So having access to capital ultimately means being able to grow your business, being able to manage your cash flows so you can pay your staff, input costs, import goods more efficiently. And that was something really important to us. And we were able to identify a $2.5 trillion gap in this particular problem. So that was something that we came across. And the third and final thing we came across was just basic access to digital leapfrogging and access to new technologies. And we believe blockchain is an innovative technology at the forefront of technology change. And unfortunately, many people in many markets all around the world, especially producers and primary producers in the commodity space, really didn't have access to this. And the bigger challenge that we came across was just just straight up digital innovation, and that was something that was very, very important, missing, and there's huge benefits off the back of that. And we've gone on and built systems. So the Palmyra platform is really our expression of these problems that we saw. And right now you can buy, sell, pay, and trace in various commodities such as tea, spices, honey, from a number of different jurisdictions around the world, such as Sri Lanka, all the way to parts of Africa as well. So we've built out this iteration. It's been live now for quite a while. And we're in the process of building some new technologies as well, which plug into it and solve some of those other problems that I mentioned before.
Yeah, I see. So, I mean, let me try to sum up a little bit of this. And this is coming from my background. When I first started learning about Palmyra myself, I had no real knowledge about how supply chains worked. And so that was a bit of an educational experience for me too, to understand, first have to understand what the problems in the supply chain were, to understand exactly what you're solving. And so we live in, especially in industrialized countries like the United States, Japan, China, most of these countries, we're used to things being fairly orderly. But in third world countries, it is not nearly the same. And the supply chain, in a very general sense, is kind of a huge mess. I mean, would you guys agree with that?
Yeah. You know, Sam mentioned work in emerging markets. So for those who might not know much about me, well, first of all, my name is Daniel Friedman. As said before, I'm the CEO and founder of ZenGate Global, building Palmyra. But I also have a pretty long career in IT, spanning from the 90s and up until probably about 2016, when I came across this little known project called Cardano, which was just starting up. And so basically I was on the founding that launched Cardano. And after we launched it, I had an opportunity to work in a plethora of emerging markets, and to really see the impact that blockchain technology has in emerging markets, and really understanding that is where the most issues are lying, and there's also where the most impact can be had. And so this is why it's so exciting to work in these markets, because you can definitely have impact, and you can definitely have more access to these leapfrogging opportunities that Sam just mentioned. And so this is actually, like I said, this is why I let Sam talk about this, because emerging markets and blockchain technology propagation in emerging markets has been a huge passion of mine. And I tend to just like ramble on because it's so exciting. And it's really exciting to be able to really have something like Palmyra, as building something like Palmyra that is already having this impact, that's already having this leapfrogging effect on these jurisdictions that we're in.
Right. Yeah. So, I mean, like, when you're talking about emerging markets, were you primarily talking about the Africa initiatives that went on with Cardano, or were there other ones involved with that?
So in my tenure at working with Cardano, we actually worked in several. We worked in Southeast Asian emerging markets and African emerging markets, in Eastern European emerging markets. I did quite a bit of work in Georgia, and also did some work with Ukraine as well. All of these markets basically face sort of the same issue, different flavors of the same issue. The issue is it's problems with access, right? So it's from anything from access to capital, to access to digitization, to access to open markets, to free markets. And so this is where we come in. This is where essentially the blockchain movement comes in. And so this is what I've been working in for quite some time, for about 5 to 6 years. Throughout my tenure, I was working in these markets. So this is why this is an expertise of mine, and this is again why we took this path.
I see. Okay, so let's dig a little bit into each of the main things that Palmyra is actually solving. And so the first one I know is supply chain inefficiency. Like you guys have told me about, there's huge amounts of middlemen and all that. What is going on with that?
So Sam, why don't you take that one?
Sure. So there's a few angles that we really thought about this, and this is a problem. I just want to say that this is a problem that we see all around the world. Like Dan and I are based in Japan. We live in Osaka. Where we're quite inspired because one of the first ever futures contracts for rice were created in the city. But it's an industrial city as well. A lot of commercial trade happens, and Japan is notorious for having extremely complex supply chains. It's a big country, of course, but goes through lots of middlemen, and developing and developed markets are in no shortage of these types of solutions as well. And that's just something to identify. But when it comes to supply chain efficiencies or supply chain problems, one of the big things that we find when it comes to friction in terms of a transaction is trust. And the beauty about blockchain means we are in the business of trust, or in the business of not needing to rely so much on the traditional ways of thinking about trust. And one of the first problems we came across was access to data. And this comes in many different forms, whether it's in shipping or in the logistics space, knowing exactly where your products are, where they sit, are they in warehouses, are they in transit? Having that ability to know in real time was really important, and there's huge implications on this. And one of the beauties of knowing where things are sort of provides that transparency that you need in a deal. One of the second thing that we also came across is this idea called in finance called counterparty risk. And counterparty risk effectively means how do you know that if you pay someone that you'll receive your goods, or if you send your goods as a producer or as a exporter, how do you ensure that you get payment back? And the problem we solved there was embedding a cross-border payment solution with escrow. So escrow features allowed us natively within our platform to actually ensure that we brought down some of these counterparty risks. And the last bit as well, which adds even more sort of trust into the system, was a KYC process for our producers. So we vet our producers that onboard onto the platform, the cooperatives and the factories we work with, so that you don't have to effectively ask your buyers to go through that process of vetting, making the mistake, having to sample things over and over and over again, which is extremely time costly and ineffective as well. So we have a system really focused around this piece around trust and how we bring that to life. And through economies of scale, as volumes grow, many of these things that we have integrated become cheaper and cheaper and cheaper. This allows us to negotiate better logistics rates, negotiate better escrow or cross-border payment terms. And effectively, as the system grows, the trust grows as well, but also means the cost savings grow. So effectively, all of this gets to get redistributed back to the producers and back to the buyers as well. So that's one of the main things. The final piece really that brought it together was having a platform where producers and buyers could interact and meet with each other. So right now, because of the complexity of the system, many of the producers and the manufacturers and the processors in these developing markets don't have access to alternative ways of making sales. There's rigid systems in place which they always follow, they've been following for generations. And whether it's the fact that they don't know there are other options or they feel forced into this option, it really limits their ability to explore outside, expand their growth opportunities, and also at the same time reduce the risk and consolidation of that risk on one particular party as well, who they've always been selling to. So the platform itself really focuses around that, and buyers, whether they're medium-sized or larger importers, can actually directly interact with these producers, making the process much more efficient, much more transparent, and increasing the amount of trust that happens in the transaction itself.
Right. So I have a just kind of a general. It's not really a question. I want to try to sum this up though. Would you say that the bottom root issue that kind of leads to all these other issues is actually the lack of traceability, the lack of visibility into the data, which was preventing any actual optimization from happening?
Yeah, it's actually, and actually, I think maybe Theo can expand on that because he's quite good at articulating these parts. But Theo, I think what we kind of need to talk about here is opaqueness in these processes, right? I mean that's what we're basically talking about. And Theo is actually Greek. I mean, obviously, he's Greek. He's like the the epitome of Greekness. And Theo firsthand knows about these issues because even though Greece is obviously it's not a developing nation, it's a developed economy. There's quite a bit of agricultural exports and imports happening, and so you also have these issues, right, with olive oil trade, with olives trade, with various other soft commodities that come out of Greece. So why don't you speak a little bit about that?
Yeah, I mean, this problem, like we've been discussing about emerging markets, but at the same time, like Sam mentioned as well, we actually see that everywhere, on every developed country. Even I live in Canada, and I see that on on a day-to-day basis. But same goes for Greece, like Dan just mentioned. There is a big supply chain inefficiency, right? Like we mentioned earlier, there's a lot of middlemen. There's a lot of people that are just trying to make their own buck, if you will, throughout this whole process. And that's definitely something that goes a long way, and you can find it on every single country. We mentioned, of course, the lack of traceability. There's a lot of producers that they just have to sell all of their harvest to just one single person that will come and just buy their whole their whole harvest, because they don't know any other person to sell it. With that being said, if you were to have access to global markets through Palmyra, you could sell the same product that you harvested and make 5-10 times even more money just from selling exactly the same products. So lack of traceability. We discussed about the logistical challenges, of course, that you have inefficient and expensive trade routes. I'm sorry. And we also, I'm not sure if we brought that up, but there's also a really big, identity and reputation issues that a lot of people in these emerging markets are facing. And because of that, they don't have access to any financial services. So, this is something that we see a lot, even. And I brought Greece as an example, which is, it's in the European Union. We would all think that, it's a westernized country and there is so many things that are, working great. But in the end of the day, it's actually not true. And I just wanted to finish off by saying this. A few months ago, we would see all the farmers, producers from all Europe pretty much on the streets, being on strike and actually, asking for more favorable situations, like working conditions and whatnot. So there's definitely a lot of issues that these producers and the supply chain as a whole is facing, and that's what we're trying to tackle.
Right. Yeah. I mean, there's a lot of major problems that are going on. Of course, we've all seen on the news and all that, the farmer strikes in multiple different countries recently. But yes, it's a huge problem, and quite interesting. Like that, we don't really see it too much on our television or anything about how these disadvantaged regions really don't have the same financial services. They don't have the option of going to the bank and getting a loan. They don't have the option of proving who they are in any way. And so these are really big issues that they cannot solve on their own, not without some other type of a platform to help them at least establish that reputation.
Yeah, absolutely. I mean, and again, the bottom line here is lack of access. In this case, it's lack of access to digitized services, some of which are just not available, and some of which are aggregated or kept through aggregators. So as Theo mentioned, it's not. The problem isn't always there's some guy standing there stopping you from selling to a wider market. The problem is that just you don't know how to get to that market. Now on the same end, if you're a buyer or if you're a trader, you don't know how to access. You might not know how to access, say, the Sri Lankan market, the Sri Lankan tea market, and you end up having to buy from somebody who kind of tells you that, yeah, trust me, bro, this is commodities from Sri Lanka. but you don't really have a way to immutably verify this, trustlessly verify this, unless you use a technology like blockchain. What Theo mentioned, the access to services, a lot of it comes, obviously what Sam mentioned, comes from de-risking through one of the things is trust scoring. And trust scoring is very important when you're actually lending money out and creating more lending opportunities. And so one of the things that that you face a lot in these markets is not just lack of opportunity for lending, but lack of opportunity for reasonable lending. Because quite a few of these economies, even though you might have access to lending, you'll still pay something like 30, 40, 50% per annum interest. And these are short-term loans, so you can basically, it's not like you're taking this loan out, you're taking out $100,000 and you have to pay, $150,000 back. It's not that. It's short-term loans, right? But then it aggregates into this really huge sum because of the risk profiles and the lack of de-risking tooling available to lenders. And so, number one, you have a very small slither of lenders that are actually capable to lend in these high risk jurisdictions. And on the other side, you actually are excluding a lot of lenders and a lot of mediums like DeFi, for example, that could potentially solve these issues, but they just don't have access to the tooling. So it's a big, it's a big like wild card for them to go into these jurisdictions. So again, that's where these technologies come in. That's where these, like I said, things like de-risking, things like on-chain certifications, on-chain warehouse receipts, on-chain IoT devices that can, prove that, there's that stuff right there, right? It's not just made up. And so it leads us back to this, to my original point is it's all different types of access restrictions, access opaqueness, and process opaqueness, which is what we're here to solve.
Right. Okay. So, I think we've pretty much explained a lot of the benefits, but one thing that I don't think has been made very clear here is what is the A to Z that happens? Maybe you could just walk us through you have a grower, a producer, he's grown some tea, he wants to sell it. What is that the journey for his product?
Sure, I'm happy to touch on that. So in terms of what we have today, which is the buy, sell, pay, trace platform, it's really quite simple. You might have supply chains. There's two sort of main things which are quite common, which is the farmer might either produce something and process it themselves, and then it gets aggregated through some form of cooperative, and then they can go to market, or it's the other way around. The farmer produces something and it's the raw inputs into some process, and then an aggregator like a factory will then produce the goods, sourcing from many, many different types of farmers to get to the end output. So there's two options there, but at the end of the day, you get some form of output ready to be, which is already processed and ready to be exported. And through the platform, they can KYC, and they've got their payment details already there. They can list their products and their batch, which has been traced, and then engage in a direct sale itself with the buyer from another market. So that's the way it currently works. On the buyer side, they can have a payment rail in, the funds get escrowed, and then once the deal itself has gone through the terms of the sale, so that could mean, you send it to the port of destination, or it might be the port of origin, or maybe it just ends up in the factory itself, that triggers the escrow release, and then the payments then get paid directly to the producer itself. So that's how it currently works. In the future, when it comes to lending, there are a few other systems in place which will allow us to get there, but I think you might have some questions on that. So
Well, I mean, you're going down the right route, but what I think what we want to do is talk about Palmyra basically at the next stage of it. So you have two buyers engaging. What part of this is actually on chain at this point? Like, is there any on chain action?
Yeah, absolutely. So right now, what we have is a tokenization and traceability protocol built on Ergo, and there's also actually subsequently a version ready for deployment on Cardano, both open source, obviously, that handles tokenization and traceability. So the traceability aspect is actually embedded through through tokenization. And so the commodities on Palmyra right now are tokenized and tracked and traced throughout their life cycle from from producer to buyer. That aspect is coming online, is online already. We're also right now working on we're talking about talked about the trade DeFi component, which is essentially bringing together DeFi and trade financing needed for producers to have access to capital instead of having to take money from their P&L. And of course, on the risk profiling side, right, on the reputation scoring side, is where we're actually looking to integrate technologies like DID from Nervos, which would be a great, I believe, a great addition to the entire system, to the entire suite, so that we can enable a lot of these other services that are almost ready to go. And also, it's actually something that I think is very important to touch on, to really understand how and why this business is succeeding, right? So in this industry, we see this quite a bit, right? Have novel solutions. You have a lot of this really good technology. Technology is coming from the Nervos ecosystem, from the Ergo, from the Cardano ecosystems, but then they kind of get siloed, I guess, for lack of a better word, in Web3. There isn't enough kind of outward mainstream adoption of this. Now, one of the issues with that is because we as an industry concentrate a little too much on Web3 and don't really kind of think about this like the right tool for the right job mentality, right? So what we did with Palmyra is we actually abstracted quite a bit of the initial Web3 UX. And so what we did was we came at it like a business, not like people from the Web3 space. Of course, we're all huge fans of what Web3 is about. But what we concentrated on is the actual solution. And many of these solutions actually laid in Web2. And this is how you actually build a viable business that you also utilizes Web3, utilizes things like traceability. For example, we solved issues like logistics. Again, as you were saying, Jordan, we in the Western world are, well, Sam and I are not in the Western world right now, but we in the quote unquote developed nations are used to access to all these services, right? To various different options for shipping, for all these things, right? But this is not really available to countries like Sri Lanka. It's just not there. They have very few options, if not only one option, and it's usually very expensive. So what we did was we went and especially small producers, MSMEs, have a huge problem because you can't really get those bulk crates for, say, logistic. So they have to rely on the super expensive small portion shipping. We solved that for them. We actually negotiated rate cards with DHL and FedEx. So now producers, MSME producers, can utilize those services at around 40 to 50% cheaper. This was not available to them. We solved things like remittances. Again, another luxury we enjoy in the in developed nations is access to various different types of payment and remittances. You can use credit cards, you can use bank transfers, you can use crypto, all these things, right? Not in those countries. It's very difficult. What we did, again, we solved that before we brought in our remittance solution. They had to go through very costly and very slow escrow for any kind of payments that came from overseas. Now what we did was we actually utilized a payment provider that now offers credit cards. It offers very low cost and fast escrow. We're also going to be we're also integrating stable payments. We're also integrating various other payments. And again, all these solutions came from Web 2. And in aggregate with Web 2, we're also utilizing things like traceability, things like on-chain reputation scoring. Again, where it's needed, not where it's forced into, but this is where it's needed. This is where it makes the most sense. This is why we're using blockchain here. And bottom line here is that the average user of the platform does not know or does not need to know that blockchain is being used. Bottom line here is what the platform does is it makes business easier, more streamlined, and more accessible to them. And that is what really any business like this should be striving towards.
Right, right. Yeah, so absolutely. I mean, use Web3 where it is. I mean, this is one of the biggest problems that we had. I think every grant program goes through this. During bull markets, you have a rush of products, developers coming in, say they want to build certain things, and a lot of their ideas just flat out don't make sense to use the blockchain at all. I mean, I know you guys come from background in blockchain, so you really understand this stuff at a deep level. You understand where it's supposed to fit in, and that's why you've picked out specific pieces from each of the blockchains that you're building on in the ways that it makes the most sense. So the Winter protocol, which is the main traceability protocol, that's built on, is that Ergo? Is that right?
Yeah, that's correct. So we have so our main protocol is up and running on Ergo right now. The tokenization and traceability protocol called Winter protocol. However, we also built a version for Cardano. We were part of the Cardano Catalyst Catalyst round 10. And so we built out the version, a Cardano version that is also open source. So pretty much everything we're building right now is open source, and we're big believers in the open source ethos for various different reasons. I mean, and not just because of for principal reasons, but it's also it's just more business viable, and that's why we're doing it.
Right. And then then the Nervos component, DID, of course, we discussed, which is a part of the KYC for the producers. This is all done on chain, which gives them a global reputation being built on Nervos. And the really interesting part here is, I believe that the traceability aspect, with all the combined sales that are going on chain, all of this data can be aggregated to help build up their identifier, which is their DID. Am I getting that all correct?
Yeah, absolutely. Again, it's all about de-risking, right? In these kind of situations, it's all about de-risking. And what better way to de-risk than through an immutable system, right? Through a trustless immutable system. And again, this is why the DID component would be so crucial, because it allows, it's kind of like the front door to de-risking, so to speak, right? They enter through this. They enter the ecosystem through this. And so it adds all these different components. I think maybe Sam, you want to expand on that a little bit?
Yeah, I think it's important, Jordan, as well, to just ask Dan the question, like, what de-risking for what, right? Because that's really what we're talking about. And the de-risking component is twofold. So the first is the actual transaction itself. So if you're a buyer looking to transact, you do want to know, like what's the track record of this person? Is it a positive track record where they're delivering, payments are going through, quality? There aren't any quality issues as well, because in the field of commodities, it really is all about access to this data, right? So you want to have grading modules which are embedded into the system, so you can see what is the actual quality, what am I paying for, right? And to actually see over time, like, whether or not that has been something stable from the producer side as well, and there aren't any issues. But the really big opportunity I see for platforms like Nervos is actually on the lending component, and it's de-risking there. And if we just start from the basics around how lending works in general, I think really helps us understand where the blockchain elements can fit in with the most positive impact. So the way the way I think about lending is there's two ways you can do it. There's collateralized lending and uncollateralized lending. So for people that have got mortgages and they've bought a home and borrowed money from the bank, or maybe done something for a car loan before, the bank itself holds some form of collateral while you're repaying your repayments effectively. And if something bad happens and you can't make your payments, the bank or the person lending you the money will effectively take that collateral and they'll sell it off and they'll settle that debt itself. So that's how collateralized lending works. We see that in the crypto markets as well, where you might put some Bitcoin or you might put some CKB to take something out, or stables to take something out, and it's quite common. And over collateralization is even more common in the blockchain space, and that really allows you to create an environment to borrow money without really having to reveal your identity or anything specific about you, for the person that holds those funds. And it works really well because you don't have to rely on the trust of the individual, you just rely on the system. The second way you can do it is uncollateralized lending. And if anyone listening, or you guys as well, have gone to the bank and asked for a credit card before, the banks itself or the credit card issuers will run some form of credit analysis to see how likely you are to default on any payments. And they'll basically adjust you. They'll say, yes, you can use this card, or no, they can't use this card. In some cases, for things outside of credit cards, they might give you a higher interest rate if they think you're a riskier person borrowing the money. But the really important thing there is you need access to data. And this happens all the time. Like, businesses around the world get access to these things, like Amex, for example. If you want an Amex card as a business, you have to go through these credit checks. If you want a business loan, you have to go through these processes. And there's great systems already in place all around the world that have the ability to run pretty complex credit checks. And they can either outsource that by going to a credit bureau and pinging them and say, hey, what's the credit risk of this business? Or they might have proprietary systems themselves where they can basically do analysis from the cash inflows and cash outflows of the business and determine what this profile looks like. So one aspect is quite simple, although requires more collateral upfront to effectively get into the process of borrowing the money. And the other process is way more involved at the front, requires a lot more data, but it's more capital efficient because you're borrowing money without putting anything up front itself. So where I actually think blockchain is heading in the long term is towards the uncollateralized way, where you can build up a score, you can build a reputation score. There'll be systems in place, and you will be able to borrow money based on how effectively you are transacting and prove that you can repayment of loans. And I do think that's heading in that direction. But to be frank, we're not there yet. And I've been talking about this stuff to some of the leaders in the blockchain space for quite a while. It's been this idea I was thinking about in terms of a decentralized credit bureau. I have been thinking about for many, many years, and I've spoken to people about it itself. But we're not there. Like, even years after these initial conversations I've had, we're really not there. So this then lends yourself to ask, okay, what can we do today? And it's really in that collateralized lending space. And the beauty of what you can do in the commodities business is that you have licensed warehouses that store commodities, and in many cases they just sit there. And you can think of it as just assets just being underutilized, right? You have these great assets which might be typically seen as illiquid, and they'll just sit in the warehouse. But you have, as a business, many costs coming, right? You have to pay staff, you have to pay for the fertilizer if you're using that, to pay for the seeds, the machinery. And there's a term called a warehouse receipt in the commodity space. And really what this means is when you put something into a warehouse, the warehouse provider gives you a receipt which says this is your claim to the thing in the warehouse. And in some of the developed markets out there, banks and the financial institution itself actually take these receipts as a form of collateral, right? And you can basically go to a bank, give them this receipt, they will hold on to it for you, as the collateral, and they'll basically lend you out some money at pretty good rates, because they know that if something bad happens, they've got the collateral, they can go to the market and just sell the commodity itself. They'll get their money back, similar to the way that you'd repossess a car or take a home in case someone defaults on their mortgage. So this is where we can actually play. There's a very clear legal framework on how this works. Tokenization lends itself extremely well, because you can now have a immutable ledger tracking what goes in and out of the warehouse, and you now have an on-chain digital collateral now. So the on-chain collateral that you can extend itself to access DeFi markets that have never seen these private credit, these trade financing deals ever, right? And this is where innovation comes in, and you basically open up the opportunity for people participating in DeFi, all of us on this call, many people listening to this live stream, yield that they never got access to before. And this, I believe, is a game changer, because it not only means the people and the producers benefit from it, but we do as well. If we get to participate in trade financing yield that we don't get access to, like maybe we only get access to super crazy unstable DeFi yield, or like bank yield. Like if I go deposit money in Japan, I might get 1% a year in terms of returns in a weakening currency. Like I personally want more opportunities to grow my wealth, to grow my options of growing my wealth. So this, in my opinion, is a game changer. And the fact that it's collateralized as well completely reduces the risk placed on the transaction. So these are sort of the things we're thinking about, and there's clear ways of doing it already. We're not reinventing the wheel. We're opening up the access from a finance point of view, and this is where I think it's heading. But there is a clear path forward as well in terms of where things will grow when it comes to DIDs and reputation systems.
Right. So anyway, I just want to point out to anybody who's listening to this, if you're going to replay one part of this presentation, it's going to be what Sam just went through. It's kind of a complex subject, but that's really the key aspect for anybody who's into DeFi, where you want to see where the actual opportunity is. It's what he just described here. It's where the producers actually have their inventory and warehouse, and that's used as collateral to get loans. And DeFi people are from all over the world are going to be able to access this in a way that they never have before. This is opening up a brand new, gigantic, multi-billion-dollar market to DeFi that was never there before.
Yeah, not to jump in. This is not multi-billion. This is multi-trillion, right? There's a multi-trillion-dollar gap when it comes to trade financing all around the world each year. So it's enormous. So and this is something I say in spaces as well. Like, we're so tribal when it comes to access to DeFi, comparing TVL in our entire blockchain ecosystem. But like, this problem itself is bigger than the entire market capitalization of crypto itself, right? There's so many opportunities. And the great thing is we won't be the only ones doing it, right? And there's going to be a myriad of trade financing funds, banks, development institutions, DeFi protocols, all looking to figure out how to route to these opportunities. And many ecosystems can play a huge role in enabling this. Nervos is one of them, is our belief. Like, so the market opportunity is humongous, and the amount of people that will get brought into this who aren't even in crypto right now is even bigger.
Yeah, and we're talking about, you said billions. I mean, we get into billions when we're just talking about Sri Lanka and that particular region of the world. That's just in the billions. Trillions. I mean, if you add developing nations and developed nations, because you have these issues all over the world. This is not just countries like Sri Lanka or developing African countries. I mean, you have the same issues even in the U.S. You have the same issues in Australia. They're all over the world, and this is why we're so passionate about this particular subject, is because it's very clear to us that this could make impact. And it is very clear to us that that doesn't just make an impact, we also have the like the capital for this, because it just with DeFi alone, there's billions and billions of dollars in DeFi right now, and not a lot of it is being used for these real fi opportunities. And one of the reasons is obviously because they're just not developed enough. This will develop these real fi opportunities. This will show people that, yes, you can use your stable coins to lend out a collateralized loan or an over collateralized loan, which will actually, you can see it go into action. And you can actually back it up with data saying that it's not just a trust me bro situation, but it is real, and you're making an impact, and you're actually creating really good yield in the back, because the opportunity here is I think quite a bit better than the average yield farming that you would get if you do something like your yield farming with stables. So it makes sense from both ends. And so it's just a matter of putting the rails in place, and that's what we're doing. And this is where ecosystems like the CKB ecosystem, Nervos ecosystem comes into play. There's so much opportunity that to bring this technology through this ecosystem. Ergo, Cardano, all these different ecosystems, the UTXO family in general can make a humongous impact on this entire sector. And
yeah,
there's so much market. There's so much market market share there for everybody. There's just, you don't have to fight over the same piece of bread.
Yeah. I think that this industry has gotten lost in a certain way. They've forgotten that we can do more than meme coins, and that there was a big intent that we were all trying to do. That was the intent of this, and this is why these types of projects get me so excited, is because I actually see a route. It's not just this pipe dream of someday we can do something. Here's the actual route that we use to get there. I want to remind anybody who's listening, please go ahead and ask your questions at any time. If you have any questions, we're running a little bit slow on this one, so we're going to have to power through this next part. I want to jump directly into partnerships. I know you guys launched a bunch of partnerships that on your social media recently. Can you tell us about some of those?
Sure. Yeah, I'll jump into this one. So yeah, several really exciting partnerships and collaborations. So first and foremost was the World Mobile Partnership. And so for those who do not know about World Mobile, Nervos ecosystem, this is a telecoms company that's one of the biggest. It's basically I think it's the biggest project on Cardano and cross chain right now. I think actually, you know what, our friend Theo has been in the World Mobile ecosystem for a very long amount of time. Maybe I'll hand this over to him. How about you give them the rundown on World Mobile, Theo?
Yes, of course. I'll give you the rundown for all the partnerships. How about that?
Okay, go for it.
So yes, the very first one that we announced a couple of weeks ago, and we're just so excited. Again, I have personal interest in this because I've been involved in the World Mobile ecosystem since pretty much it came out, and I really like the vision and the mission that they have, and more than anything, I really like the fact that they have the sharing economy model where they make sure that they incentivize the community to actively participate in this project. And to me, that was one of the biggest things that got me in there, along with the vision, of course, and everything else. But yes, World Mobile has been one of the very first partnerships that we announced the last few weeks. And that really what means for our users is that all the producers that we are going to be onboarding on the Palmyra platform from around the world, they will be able to now have access to internet and have connectivity to their farms, so they can then use the Palmyra platform so they can sell or buy the goods. So, very essential component in order for people, for the farmers, the producers from around the world to use the Palmyra platform. They will need to have connectivity. That's something that we're going to be bringing along with this partnership. Of course, the other big thing is that we are going to be, getting access to the regions and the connections that they have, and vice versa. They will be getting access to all the networks in the regions that we're in right now. So very exciting partnership. I'm just, again, just being aware of the time, I'm trying to go through all of them, but I'll be more than happy if there's any more specific questions on these partnerships. Second one that we announced was with the USDM, or Moneta. This is one of the stable coins that we have on the Cardano ecosystem. And this is the beginning of us saying that we are going to be accepting stable coin payments later, either in this year or early on next year. But that's something that we really want to do. So, right now, all the purchases on the platform are done with fiat currency, because these are real world businesses interacting with each other. But in order for us to show them and bring them into the crypto and the blockchain space, we want to slowly integrate stablecoin payments first. So, all of our users will slowly start to learning about, this form of payments and what it is. And then later down the road, we will be bringing crypto payments as well. Moving on to the third partnership that we announced with Minutes Network. That's another exciting partnership that we put together like a few months ago, I'd say. But one of the things that we're going to be doing with them is they're actually a telecommunications company. They're tokenizing minutes, and I'm not sure if some of you might be aware, some not, but there's a lot of emerging markets that are actually using minutes as a currency because their local currency has just been so devaluated. So, one of those big things that we're going to be doing is we're actually going to be commoditizing these tokenized minutes, and they will be able to sell those onto the Palmyra platform. Another big thing is that we're going to be using their in-app calls through the Palmyra app, so people can actually use calls to call each other through the Palmyra platform using the Minutes Network API. So again, huge partnership. There's a lot of things that we're going to be doing with this team, and there's a lot of things that we're going to be discussing about later in the year. Last but not least, we mentioned earlier around the proof of reserves and the tokenized warehouse receipts. This is where our partnership with, this is where our collaboration with Chainlink comes in, and because we're going to be using their proof of reserves, so we can actually make sure that all the collateral, all the data, along with IoT devices that are going to be on these warehouses, we're going to be making sure that the collateral that people say that it sits on their house, it's actually there, and all the data, it's over there to back it as well. So again, 4 partnerships that we announced over the past couple of weeks. Very, very exciting to be able to use different applications from different chains, and in the end of the day, making sure that we bring all the solutions that are needed to our producers and to the users that are using the Palmyra platform.
Great. Thank you for that. So we need to quickly move on to the next section, which is the Palm token, which is the token that works in with Palmyra. Could one of you please tell us a little bit about the Palm token, the tokenomics, and why it's a benefit to investors?
Absolutely. I'll take this one. So the Palm token is part of what we call the Palm economy. And so the Palmyra platform, the ZenGate is building a Palmyra platform, part of the Palm economy. So the Palm economy consists of three what we call main pillars. So the first pillar of the Palm economy and the Palm token is the staking model. And so this is where this is where direct passive income can be generated. Essentially, what happens is the token is staked by the holders, and in return, they'll receive what are called rebates. Now, the reason we call them rebates is because platform itself, the Palmyra platform itself, transacts mostly in fiat. And this is just the nature of the business. The commodities are done in fiat. You're not going to, if you want fast penetration into this ecosystem of commodities trading, you need to accommodate the payment methods, fiat being the main one, obviously. However, what's really cool, and which is part of our tokenomics, what we do is we take a portion of the transaction fees that are generated on the platform, which is mainly how it makes money, and we convert them through basically buying Palm on the open market, convert them back into Palm, and then distribute them as rebates to the staking holders. So number one, that obviously creates rebates for those who are utilizing the platform. Number two, it creates staking income or passive income for just Palm holders. And what it also does is it creates constant capital infusions into the Palm economy, making it open economy. So it's very sustainable. It's very scalable. So this is very important, and this is very important for the for the lifeblood of the economy, for the sustainability of the economy. And so this is very exciting. So right off the bat, and this is actually going to be available pretty much immediately after we launch. We launch the token. So the next pillar is Oracle incentives. And of course, as Theo mentioned, we're collaborating with Chainlink. We're also going to be utilizing other oracles as well, because this is a really robust undertaking, and it needs various different types of oracles. And so each of these oracle families are going to require incentives to operate. And so this is obviously part of the tokenomics of Palm. And so the third, and actually another very interesting and very cool component that the Palm economy encompasses is the Palm DAO. And again, this is where, again, if you're a participant in the Palm economy, you can have direct access to the business of Palm economy and Palmyra. And so essentially what it is a decentralized business development treasury that works in a way like Cardano Catalyst works, where say you're an olive oil producer in Greece, for example, and it doesn't have to be that, but for example, you're an olive oil producer in Greece. Greek olive oil is not on Palmyra just yet, but it's a big opportunity. What you do is you go to the Palm DAO and you submit a proposal saying that I can bring on myself and several of my producer friends onto Palmyra, and I can also onboard this entire sector that is in dire need of this technology and in dire need of this platform onto Palmyra. I need an X amount of funds to make that happen. They go to the community, submit a proposal, it gets voted on. Again, in the way the Nervos DAO works. I mean, pretty much, right? Gets voted on. Once approved, you get the funds and basically go and build and help the platform and the ecosystem scale by yourself. So this is not us doing it. This is everybody doing it. And this comes back to what we're talking about, the sharing economy. There will be a day, and this is something that we hope that will happen one day, when Dan, Sam, and Theo are no longer, and the fine folks at ZenGate are no longer going to be that needed to drive this, because it's going to be a community-driven ecosystem. Again, just like Nervos, just like Ergo, just like Cardano. And we believe that this is a lot more sustainable than a centralized way of operating from here to eternity, which is what many companies are doing right now. So again, this is very exciting. This is a direct, the Palm economy and the Palm token is a direct way to for the community to get involved, for the community to generate income for themselves, and for the community to scale the entire ecosystem. And so actually, right now, the public sale of the Palm token is happening right now on Cardano. And so I think there's going to be maybe some information later on that is going to be available for people to check out about the public sale if you're interested. And yeah, so this is very exciting. This has been years in planning, essentially years in planning. So very exciting to be able to finally bring something that has true utility and true potential to the community.
Right.
Oh,
right.
And of course, so something that I wanted to mention as well, and this is I don't know, did we guys, and I know we spoke about this, maybe with you, Jordan, but I don't know, are you guys going to hate me for this? But I think we're gonna we're gonna have an exclusive Nervos round for Palm. I believe, and we believe, that this is a very strong ecosystem. We want to build in this ecosystem, and we want to bring this members of this ecosystem on board to the Palm economy. So I hope you guys are okay with this, but I think we'll be doing an exclusive CKB round, utilizing obviously CKB for getting into the Palm sale, yeah, it's going to come real soon. We'll kind of mull it over right now and give out some dates and some more details in just a little bit.
Okay. Well, yeah, that actually rolls right into this question here. How does CKB and Palm, how they would work together? So, I mean, definitely part of the sale, and we had actually talked about this a little bit prior to the actual DAO thing about how this entire program could work. And we had talked about Palm being on CKB. So, but I got to ask you, is Palm going to be on CKB?
So we were actually, and this is Theo as well, because Theo has actually been in the CKB community for quite a bit, right, Theo? You were you're a CKB fan. You had CKB before even I had CKB.
For 3 years now. For 3 years.
Yeah,
now,
yeah. So yeah, absolutely. We definitely wanted to do an RGB++ token. It made sense. The issue here is what that would create would be it would be fragmented liquidity. So you would have two ecosystems, even though they're both EUTXO, but you have two ecosystems with no way to move to move these assets between ecosystems, because we have it on Cardano. To have it also on CKB, we just have no way to kind of bridge these. And we just don't have enough time to really solve this issue right now.
Right. So what we really need is a Cardano bridge, right?
Yeah. There's definitely need for a Cardano bridge. Yeah, that would be nice.
Yeah, yes. Believe me, it would be. This has been an issue that we've talked about. Everybody in Nervos knows that this was announced a long time ago. Cardano announced it too. Unfortunately, it never manifested. We had two separate teams on it. Maybe someday. The issue is not died, is what I'm getting at. Obviously, like, we still think this is an important type of thing, but it's unfortunately not here today.
So you had two teams work on this?
We had two separate teams work on this, the Cardano bridge. And unfortunately, the product was not at a quality that the team was comfortable with releasing. So it has not been completed at this point.
Sounds like you need a third team. One that can bring quality and deploy.
Yeah, it sounds like that. Are you hinting at something, Dan?
No, not at all.
There's been a lot of hinting the last 10 minutes. There's been a lot of hinting the last 10 minutes.
So on the way to the office, I always drive over a bridge. You know what it's called?
No, what's it called?
It's called the Cardano Bridge.
It's called the Cardano Bridge.
It's called the Cardano Bridge. That's right.
I'm finding that a little bit hard to believe.
Look, just Cardano Bridge.
All right. Okay, enough, Dan. Enough.
Let's
All right.
move on. Let's move on, guys.
Let's move on. We have to finish this out. All right. So anyway, if anybody who has questions that you want to throw them out now, we're just wrapping up here. We got to talk about the current status and the future of Palmyra. The platform today we're trading. Where's it going to be in the next 3 to 6 months?
You know what? I think this is a good question for Sam because he is actually leading product right now. So where are we going to be in the next 3 to 6 months, Sam? Because he talks your ear off about this every single day.
So we talked about the Palmyra platform, what we have today, buy, sell, pay, trace. There's expansion opportunities for the actual platform itself with a number of new features being rolled out. But the big thing that we've actually started focusing on, which is being built right now, is Palmyra Pro. This is our supply chain data management solution, leveraging Winter Protocol, leveraging things such as DIDs, credentials, and that's really the key focus. And there's 3 core things we want to get done this year. The first is an upgrade to the traceability system. The second is credentials for grading purposes and quality assurance. So when commodities, when you want to understand what the quality of the commodity is before you sell it. And the third bit is actually the bit we spent a fair bit of time, which is the infrastructure required for lending, is tokenizing warehouse receipts. So all of those technologies are going to be built out by the end of the year. And we've got some bigger plans, I guess, as we roll into 2025. But for 3 to 6 months, that's really where our focus is. And we will be working with people on these solutions we're building. We've got a number of different pilots and customers already lined up to work on. So there's going to be a fair amount of users actually utilizing the system. And we'll be really excited to actually talk about that as we onboard them one by one.
All right, so much more to look forward to in the next 3 to 6 months. By the end of the year, could have some really, really good stuff coming, especially in the lending components. Okay, quick question I saw come up here, Palm on Ergo 2. Can one of you guys answer that?
Yeah. So, Sam, how about you take that one? What are we doing? What are we doing with Palm on Ergo? I'm going to bring it to Ergo.
So there is a bridge already live. Just to hint at it, the Cardano bridge, it has a different name, but it has wrapping capabilities, so you can move assets seamlessly between Ergo and Cardano already, and we will be utilizing that system to effectively bring liquidity into the Ergo ecosystem.
And it's already, I mean, it's already set up for that, so it's not like we're planning to use it. It's already set up to use it. So once the token is live, it's we're going to be able to move it between Cardano and Ergo very, very easily and very securely, and not really have these any issues with fragmentation or any issues with these failures that we've seen with bridges in the past.
Okay, so anyway, we're pretty much out of time here. We got to round this out. Could one of you just tell me? Let's end on the grand vision for Palmyra. Once it has reached its full potential, it's really rolled out the door. How's the world going to be different because of this?
It's for us and just for myself and in general. Really, not just Palmyra, but the core ethos of the blockchain movement has always been opportunity inclusion. And this is something different from leveling the playing field. I don't believe in leveling playing fields because there's no such thing. There's always going to be bumps in the road. However, if you create more access to opportunities and you give people this access, then they will in their own, I guess, motivation within their own pace will take or not take advantage of those opportunities. And so this is what Palmyra will create. It will create more opportunity for lending, for borrowing, for trading, for market access. It will become not just the ZenGate is not going to be the next Amazon. The Palmyra ecosystem is going to be a completely new ecosystem of trade of opportunity that people will be able to participate in and scale themselves and really work in this sharing economy model. And so this is what I think the end goal is for the Palmyra ecosystem, is to create this opportunity inclusive ecosystem, and to essentially have it scale and have it be viable through through decentralized participation versus a centralized way of somebody just like commands, we go this way and we go this way, because ultimately a decentralized approach, we believe, is more sustainable. And I just believe that this will be better for everybody all around. It's going to be better for the producers, it's going to be better for the consumers, is going to be better for governments, because it create a more efficient way to regulate and to assure quality, to assure compliance. All these different things can be done better with this type of technology. This is what I think the ultimate vision here is, to create this type of new ethos, of this type of new truly a juggernaut of sharing economy that will live on for generations.
The true decentralized economy. Yeah, I mean that's something that echoes throughout our community. That's what Nervos is trying to achieve as well. Let's see. I saw somebody posted a question, which I know you're not asking about the price here. When Lambo, they must be asking about when Lamborghinis are going to be for sale on Palmyra. Any plans for Lamborghinis?
What they're probably asking is when Sam, because Sam's last name is Lambert and his nickname is Lambo. So when Lambo, right now you're looking at Lambo. He's over there. Over there. Yeah. Yeah. He's under chef. Yeah. So that's when Lambo. For me, never Lambo, because I don't fit in one. I'm a large person. Maybe the SUV at some point. I don't know, but it's a very relative question. So soon, TM, maybe.
All right. Anyway, we are out of time. Let's see. The last thing. Thanks for another informative hashing it out, crew and Palm. Yeah, good to see you here, Striker, as always. And we are way over. We are 16 minutes over, so we got to round this out. To any three of you, last your final thoughts, or what socials would you like people to follow?
Yeah, my final thought is just it's great to be building in the Nervos ecosystem. It's great to be working with our brothers in the EUTXO Alliance. We're really humbled by the opportunity, and we're looking forward to bringing value to this ecosystem. I think maybe socials would be a bit better for Theo to cover, because he is the overlord of socials for us.
Yeah, guys. First of all, Jordan, I just want to say thank you once again for having us here and having the opportunity to, bring our message and talk to the Nervos community. I really enjoyed our time here, and all I wanted to say is that if anybody wants to follow us, please feel free to just go on X and type Palm Economy, and you will find us over there, or just go to palmeconomy.io, our website, and you will find all the links in terms of documentation, information, or any socials that you would like to join, along with our Discord as well. We're looking forward to talk to all of you, because we're pretty sure that there's going to be quite a few questions that you might have, and we're going to be more than happy to answer them. So do not hesitate. Come and follow us on our socials, and come on our Discord, and feel free to ask us any questions. The public sale is ongoing, and there's going to be a lot of information that are going to be coming out after this video.
CKB round. All right, don't try to avoid that, Theo. I know you guys are like, God, that guy with his
I don't mind. I can say CKB round as many times as you want.
Yeah, we're gonna do one. We're gonna do one. Yeah. I like that idea.
All right. Well, I'm going to put all the links into the YouTube description for anybody who needs them, and feel free to post links as a response to the Twitter feed as well, so people can find that. Yeah, we'll get that out in the next couple minutes. So unless there's anything else you guys would like to add, I think we're done here. We're quite a few minutes over.
Thanks,
Okay.
Jordan, for having us.
All right. Yeah. So thanks to you guys again for coming. And then thanks to everybody listening at home. This has been a really interesting project, and I hope you guys got it. If you haven't, listen to it again. Sometimes it takes a few times. It took me 5 or 6 times, just to be honest. I listened to 5 or 6 videos and read a whole bunch of stuff, and I didn't get it until I finally talked to Dan, and he pounded it into my head, and it finally clicked. The light bulb went off, and I really understood it. Anybody, if you believe in blockchain more than just meme coins, this is the kind of project you want to pay attention to. Anyway, I've said it like 5 times. We're out of time. We're way over, so I'm going to end it now. All right, take care, everybody.